In this tutorial, I explain you about financial statements. There are three important financial statements of a business concern, and they are balance sheet, profit and loss account, and cash flow statement. Now let us see what these statements are about. Balance sheet is also called statement of a position, provides information about what a firm owns and owes. It indicates the financial position of a firm at a specific period of a time. Then what is the profit and loss account? The income statement, often called profit and loss account, measures the profit or loss of a business over a specified period. And cash flow statement. A cash flow statement is a financial report that describes the sources and application of a firm's cash over a specified time period. It only deals with cash activity, that is, cash paid out and cash taken in. Now I describe you the balance sheet. The balance sheet contains assets and liabilities. And assets are those which a company owns, and liabilities are those which company owe. Assets are further categorized into three categories: current assets, fixed assets, and intangible assets. Cash, inventories, and receivables are examples of current assets, whereas land, buildings, equipment, and furniture are examples of fixed assets. Intangible assets include goodwill, patents, and copyrights. Liabilities. Liabilities is classified into two: the current liabilities and long-term liabilities. Payables, accruals, short-term borrowings are examples of current liabilities. On the other hand, mortgage and long-term borrowings are examples of long-term liabilities. And shareholder equity is also shown on liability side of the balance sheet. Share capital, reserves and surpluses are part of shareholder equities, and together these three are called as a net worth of an enterprise. Now we look at balance sheet equations. Balance sheet equations: assets equals to liabilities plus shareholders equity, as liabilities equals to assets minus shareholders equity. Shareholders equity equals to assets minus liabilities. Now we move to the profit and loss account or income statement. The purpose of preparing income statement is to ascertain the profit or loss of a business concern during the accounting period. The income statement always begins with the sales or revenues from operations, and from that various expenses are deducted. So income to a business comes from two sources. One is the revenue from operations, which includes sale of a product, services, which is a core to the business enterprise, and income from other sources like interest, dividends, gain on sale of investments. When it comes to the expenses, expenses are classified into material expenses, manufacturing expenses, personal expenses, selling and distribution expenses, administrative expenses, financial expenses, and non-cash items like depreciation and write-off. Examples of expenses are raw materials, power, salaries, promotion, traveling, bank and financial charges. Now we look at profit and loss equations. Profit and loss equations. When income is greater than expenses, the business makes profit. When income is less than expenses, the business incurs loss. And finally, we look at a cash flow statement. The cash flow statement reports cash flows during a period, classified by operating, investing, and financing activities. Now, what are operating activities? Cash flows from operating activities are primarily derived from the principal revenue producing activities of the enterprise, like cash from sale of goods, services, royalty fees, cash receipts relating to future contracts. Next, investing activities. Investing activities show the amount of cash from firm spends on investments, that is to acquire fixed assets, cash payments for future contracts, etc. And lastly, financing activities. Financing activities involve changes to the shareholders' equity, long-term liabilities, and short-term borrowings, cash proceedings from issuing shares, debentures, loans, bonds, or part of financing activities. So these are the three important financial statements of a business concern. And with regard to the public limited companies, these financial statements are available on company websites and the documents are publicly available.